here's how I want to kick off today's discussion. And by the way, if we have any newcomers or anybody that's relatively new joining us for the first or second or third time tonight, welcome back. We love you. We're excited to have you here at Tackle. We're all just one big happy family. So don't be shy. If you have questions, comments, just chime in there in the chat window and we will help you out. All right? Yeah, Cecilia, Blake, good to see you guys. Welcome, welcome. Okay, we're gonna talk first about an equity curve. Back in the day, when I was teaching options 1 and options 2 over there at Legacy, especially options 2, that particular elite training, there's an entire section on risk management. Actually, now that I think of it, it's options 1. But the way that we like to approach it is to look at what we call an equity curve. Okay, so for those of you that use the Tackle Trade Journal, that Excel spreadsheet, you know that it draws a picture that illustrates your profit and losses over time. Okay, if you think about the name equity curve, equity is just the value of your account, and curve just means, well, it's a drawing, it's a line that plots the value or the changes in the value of your account over time. Okay. So the horizontal axis is going to represent time. And then the vertical axis is your account value, how much money you have. Okay. So let's think about this. If you have, let's plot a couple different things on here just for fun. So if you have cash in the mattress, cash in mattress, what does that look like? What does that look like on an equity curve? Over time, what does your cash in the mattress do? Wouldn't it look something like this? The flat line, right? Be a flat line. Yeah, and let's, for simplicity purposes, let's forget inflation for a second. Yeah. So you're right. It would be going down in value over time. Let's just look at the principal value, not the purchasing power. So if I put 10,000 bucks on a mattress and I come back 5 years from now, still gonna be 10,000 bucks. Yes, my purchasing power will have eroded, but the principal, the amount of money will still be $10,000, right? So I know, and this obviously isn't a recommendation here, but my wife and I were visiting one of her friends years ago, and the husband, he had a business online. He sold paintball materials, so paintball guns, paintballs, masks, all that crap. He had an online website, and his wife talked about he just has all this money lying around the house. Like she'll pick up a book and she'll open the book and there'll be tons of money in there. And it's great that the guy was saving, but kind of foolish that he was just putting money in books around the house, losing track of it. So obviously, if your money doesn't grow over time, then that's a problem, right? Okay, how about cash in a savings account? Cash in a savings account. That's a little better, right? A little bit better. Now, you can get, if you know where to look, you can get these days 1.5% risk-free if you know where to look, okay? So most savings accounts are these days about 0, but if you get a high yield savings account, or I know some at Ally Bank, you can get a no penalty CD that pays upwards of 1.5%. Okay, so a little better, but not that great, right? Little bit better. I mean, you're going to have a teeny bit of growth, right? But not much. So that's kind of what your equity curve would look like if you had cash in a savings account. A little bit better, but not that great these days. Okay. All right. So now you get the gist, right? How much does my money grow over time? Well, let's suppose that we have two trading strategies. Okay, we'll call this system 1. And you know what? Let's specify it's trading. So trading system 1. I'm just gonna put trading 1. Let's say that looks like this over time. Okay. And trading system 2, put in green here, looks like this. Okay? You tell me which line, you get a pick. Which line do you like best? Yeah, I agree with you. I think the green line looks best. Okay? So it's making money over time, it's growing, but it has less volatility, right? So let's point out the positive attributes here. So you have lower volatility. Lower volatility. Okay, you probably have less emotions associated with that. Less emotions, right? So what I want to do today is talk about how can I become the green line? That's our question. How can I become the green line? What can I do? What can I do to make my outcome, my portfolio value, more likely to be the green line? Okay.